Welcome to our money story movie. This is the basics of how to explain or how to read a money story expenditure line. Now notice that the symbol here, which is expenditure, the dollar sign and the arrows flowing out. Your logo would be in here, and this just says that what the period's for. Here it's the financial year, but it could be any period. And here we've got the 4 seasons, and of course these 4 seasons relate directly to the financial report, to quarterly reports. First quarter, second quarter, third quarter, fourth quarter. And in the north of Australia, or the top end, we'll have 3 standard seasons, mainstream language seasons: the dry, the build up, the wet season, and the dry. And when you're giving a money story to different groups who have different local seasons, your further step is to draw up and relate these 4 seasons to the 6 seasons, or the 8 seasons, or the 5 seasons, or however many there are locally. Here, this is the months of the year. Remember to stress to people the difference between the calendar year, which starts obviously in January, and the financial year, which starts in July, and give them some sort of marker here that whatever they're used to. Okay, so the red line across here up to this orange line represents the period. This is just an example, and this period ends in March. So the report is from July to March. The grey area here is more than budget. So you need to stress that to people, to say, well, at the end of the year, normally we don't plan for more than 1 year's funding, or it's just a good way to, explain that at the end of the year we have to go to the next year's plan. Now we go on to the 4 key parameters of budget accounting. Obviously the 5th is the time frame. So the first one is your budget, your full year budget. So we put an individual picture in the money story line, and this happens to be fuel. And here we've got a green bar. The bigger, or should we say the higher the bar, the greater the amount. And notice here the Q for the person that's viewing, that this is actually flowing out. So a budget in simple plain English is a money plan, and we've got $360,000. So the next step is to say, well, what is our target? And we're talking about recurrent or ongoing expenditure, like wages or use of fuel, things that you use in your operations, recurrent or operational spending. And the first thing we must do is have a target. And here we have the target. So the target in accounting language is your year-to-date budget, your year-to-date budget. So as this moves across, the time moves across the time bar, the red time bar. So the target moves across. Here it's March. If the report was for June, the time bar would have shifted along and would be at the end of the financial year. Now clearly it can't go any further, can it? Because that's the end of your year. So we have budget, full year budget, year-to-date budget, and then we have the actual. And here what's interesting is this actual, well, you spent $450,000. Now, if your plan to spend, your green and your blue Q for the viewer, to spend goes from July to June, if you spent 450, you'd be spending money up here from here. You just don't have a plan. So your target is where you would spend to if you got to March. Well, you spent the money in the tank, went all the way down to 3/4 of the way. That's March, if you imagine the blue liquid inside there. Then you spent all the rest to the end of June, so that was dry. Your tank was then dry. You'd reached the end of your journey. And here we have more than budget. So you actually spent more. So you spent 450,000 as opposed to 360,000. So you spent another 900,000, and that's recorded here. So overspend, red, and dark red is, when you're actually more than your budget. So you're actually eating into next year's money. You're taking money from somewhere you just do not have. And lastly, the fourth parameter of budget accounting obviously is the difference between your target and what you actually spent, or what you actually did. So in order to have this, you have to have a plan that gives you your target, and then you can measure the expenditure against this target. Well, here's the difference from target. If you're under, that's a good thing. If you're over, that's a bad thing. So usually, and draw attention to this, to your viewers, the under and over symbol as you're going through. Repeating is good, but repeating in exactly the same words is boring. So you've got to find different ways and little things to talk about, but repeat each time when you're first presenting money stories to people particularly. And here we happen to have used a traffic light symbol. You can use faces or ticks, or we've got different things we can use, but we used a traffic light symbol, and clearly going over your target by so much is a red light. And note that you're $180,000 over, not over just more than budget, but over your target. And that is an important thing to remember. So all this here you shouldn't have spent, and of course at any time you shouldn't have spent this. So if you add these two together, they give you 180. 90 for here and 90 for there. Remember, when you're presenting, to point out if there's an arrow here, obviously this can't be as long as that, there's no space. So when you're 2 months over the year, so you spent into July and August, you go beyond that, we put an arrow. And here you can see that the overspend drops down. There's a good reason why we use negatives going down, because it fits in with the whole of our system. We'll explain that in detail later, but for now, notice that this goes down. So it's saying we're down by 180,000. So that's a brief introduction. In a standard financial report, you have 4 main parameters, which are usually set out in columns, and quite often in exactly this order. Your full year budget, your year-to-date budget, which is your target, your year-to-date actual, number 3, which is what you actually spent, and your budget gives you your target, and what you actually spent, the difference from the target, gives you your year-to-date variance, which is just the difference or the gap. So you can see that the money story, each money story line, is an exact graphical representation of the accounting report. So anyone that understands this can understand at a strategic broad level the information that's actually in a spreadsheet, and that's very, very powerful.